expect some investment, and that investment would be via angel investors. Angel investors are someone, maybe it might be a doctor or an engineer or any high net worth individual. Anyone who is having good money and is okay to fund a particular startup is an angel investor. So whenever we are starting a company, either we are bootstrapped, that would be via our own investment, our personal savings. If it's an angel investor, it's going to be a seed investment at the initial stage. Whenever we are starting a company, there will be an idea stage, right? First we are going to get an idea. That idea we are going to convert it into a prototype. That prototype we are going to execute into the market to get to know what is the market demand in it. And then further would be the funding part. That's when this angel investors comes into picture. Okay, what would be a venture capital? Venture capital is something you get a funding from a venture capital by a firm, by a company. As in angel investors are private investors and venture capitals are a company. They get the funding from multiple investors. They are in a firm. That firm is something which is going to provide funding to our startup. There would be loans, any bank or any third party who take you a loan to start a business. So this comes to the funding source. Next would be the investor expectations. Whenever an investor is planning to invest in your company, the most important thing he wants to know is your team competence. How good is your team? See, they're not going to put the money into your company just like that. They're going to analyze your business potential. What is the market you're trying to capture? How good are you about the topic or the idea you are into to start a business? Then comes the pitch techniques. How are you going to pitch yourself in front of an investor? See, all of you will be having some or the other idea, right, to start a business or someday. Once you pass out of your college, the first thing you might be considering is getting into a job or to start a business. So techniques would be, the first thing is you need to know what is the business model you are looking into. Whether it is scalable, what is the milestone scalable about it, and the usage of funds, the fund requirements you would require. You need to sort out these key points whenever requirements, the usage of funds. So all these things should be kept in mind before we do a pitching in front of an investor. And the fourth insight for an entrepreneurial funding is networking importance. So networking is very important in any field to get maximum funding opportunities and collaborations. The higher the networking you have, the better it is. As in your academics itself. See, you know a lot of your networking. You need some knowledge about anything new. If you're good in networking, you can acquire it about it, right? So it's always very important that you have a good networking, whether let that be in your academics or as an entrepreneur. So let's go to the further slide and see what else is there. Someone who is going to fund a startup at a very early stage, at the idea stage or at the seed stage, for the startup to develop and for the startup to begin. And then comes the networking part. As you open new doors to get new business opportunities. And angel investors are someone who are going to be a mentor to you. They are just not going to put their money into your startup, but they are also going to provide you their personal entrepreneurial experience. For example, if I'm an angel investor, actually I am one, but still, if I'm an angel investor, whenever I'm funding a company, I'm going to put my personal entrepreneurial experience and mentor the company so that I can give my inputs as I'm putting my own hard-earned money into it. Then we are going to validate it. How sustainable is that company? On the longer run, what would be the scalability of it? Further, we have to be committed to any business. We need to have a vision when we are starting something. Then I'll let you in further. Yes. So now coming into the venture capital landscape overview. Alright, the funding stages of venture capital would be, they are going to support you after the seed stage. Once your company is live in the market, you're already running it, and you need more capital to scale it up further. That's when you go to a venture venture capitalists. At each stage, they want to have different fundraising strategies. The investment team should be like, first we already have an investment, the company is already live in the market. Next would be, you need further investment to scale it up. So the investor interest would be to scale it up so that your company grows much ahead. And a venture capitalist will always be very diligent in their investment. As in, you need to be having a lot of research work to approach them. See, 98 to 99% of the time, whenever we approach a venture capitalist or an angel investor, we will be turned down. Upfront, they will say you no. So you should not be disappointed. See, we have to understand how the market works. We have to go to the right angel investor and to the right venture capitalist. See, for example, you're starting an health tech startup, consider, right? And the gentleman over there wants to open a health startup. And when you are starting your startup as a fintech, you go to an investor who has no idea about fintech. Do you think he would invest in you? Definitely not, right? As in a health startup, should go to the concerned investor